What's going on, guys? This is Chandler Smith, and if you've been watching the news, you know that inflation is on the rise, and actually in a really big way. And so in this video, I'm gonna first off explain what inflation is. I'm gonna talk about the impact that it's going to have on real estate investors and real estate as a whole. And I'm gonna give you the pros and cons and what this means when it comes to investing in real estate right now. So with all of that being said, let's jump into it. All right, guys, if you're new to the channel, I've been investing in real estate for the last 8 years, and I currently own over $15 million of real estate. And so anytime something happens like major inflation or really anything else that has an impact on real estate, I want to understand it, and then I want to be able to share it with you. All right, guys, I'm going to help you understand whether inflation is good or bad. I just ask that you remember to smash the like button, and let's jump into it. If you don't keep up with the news, CNBC just released an article that said that consumer prices went up by 4.2%. And this is actually the most they've gone up since 2008. So it's a very big deal. Essentially, what inflation is a dollar is going down in value. So if last year you could buy an ice cream cone for $1, this year it's going to cost you $1.04 because the dollar has gone down in value. So you can say the dollar's gone down in value or prices as a whole have gone up. Either way, it's the same thing. That is what inflation is, and here are the big negatives to inflation. One of the biggest negatives is if you're like me and you like to keep reserves in your bank account and you're getting 0.0 whatever percent or 0.00000 whatever percent, your dollar is sitting in the bank and it just went down in value by 4%. So if you were saving money, it was like putting it into an account that you knew you were going to get a negative 4% return on that money. So that's why inflation sucks. Now, the reason this is a good thing if you own real estate or, many other things people would argue like gold or silver is that if you own something and the dollar goes down in value, whatever you own is either going to hold its value or it should actually go up in value. And that's why when they talk about consumer prices, everything goes up in value, and that includes real estate. The other thing that's kind of unique about our market right now is interest rates have come down the last year, and appreciation kind of nationwide has shot up because lots of people are wanting to purchase homes or whatever else is going on in the market. There is a huge need for housing right now. Now, you can blame that on COVID or a myriad of other things, but especially in my market, there's a big need. Supply and demand is a real thing, and so when you have a combination of huge demand and inflation, property values have skyrocketed. So when we hear about massive inflation, that means that your property should go up in value or at least go up in value in line with what the dollar is going down in value with. The other thing that's really cool about inflation is if you've invested in real estate properly, the proper way to invest in real estate is with debt. And so if you've purchased a property with 25% down, for example, let's say you own a $100,000 property, but you only purchased it with $25,000. Well, if the dollar goes down in value by 4%, essentially, and there's more math that goes into it, but let's just say that should force your property to go up in value by 4%, even though that's not exact math and I'm not gonna explain why. But let's say your property does go up in value by 4%, you just made $4,000 on your $25,000 investment, which is actually 4 times that 4%. It would be 12%. And that's why if you use debt to purchase real estate, and then there's crazy inflation, crazy appreciation, and crazy demand for property, your property values skyrocket, but your returns on your investment multiply by 4. So if you own real estate, overall, inflation is a very good thing. However, there are a couple potential negatives that I'm going to talk about, but you need to know the negatives do not outweigh the positives, in my opinion. I did want to mention one other thing. With inflation comes higher prices on homes. And with higher prices on homes comes a greater barrier to entry for people to purchase homes, which in turn should lead to more renters, which in turn should lead to more demand for rental units, which again in turn should lead to higher rents. So that's just another reason that inflation could potentially be a good thing if you own rental properties, because now you're forcing in a roundabout way more people to need to rent, which gives you the ability to raise rents, which gives you a much higher return on your investment of hopefully only 25% down. So now you're capitalizing on yet another return that is created because of inflation. Now, I've been telling you I'm going to get to the negatives, and so let's jump into them. First of all, the government plays a hand in all of this, and they're always trying to balance inflation. Essentially, they want to make sure that inflation stays at a certain rate that they've planned for. So if it goes way outside of what they're planning for, they're going to try and slow down that inflation. And one of the ways that they do that is by raising interest rates. Now, the reason that they do this is if you have higher interest rates, you have less buying power, which should in turn lower the price of homes, because now interest costs more. So for example, if you could once afford a property that cost $400,000 with $1,000 a month for your mortgage, but now interest rates skyrocket and now you've got to pay $1,500 a month for that same mortgage on a $400,000 property, well, that might be a little too tight for people. And so they might look at these higher interest rates for that home and they might say, well, I need to buy a smaller home, or I need to not buy a home at all, which in turn should kind of push down prices. What I've come to find with economics is it's like a massive teeter-totter in a lot of different ways. And if you've got a massive teeter-totter, a lot of times they're slow to respond depending on the weight you have and where you're at. But I want you to envision someone running back and forth on this teeter-totter, and the government's trying to keep it balanced. And as you run, all of a sudden it starts tipping this way, and then you're running back, and a lot of times you overcorrect or undercorrect, and it's kind of just a ton of chaos. And that's why we have two parties that argue different things that they think are going to be best for our economy. Now, I'm not going to dive into all of that because we'd be here for hours and hours, but you need to understand it's not a perfect science. But with inflation usually comes higher interest rates. And with higher interest rates comes kind of a weird thing with real estate, because essentially it should force down prices. Now, it doesn't always work that way, and a lot of times there's a lag. So there's so many different things that go into it. But if they do raise interest rates crazy high, that could create a real problem, because now you've got tons of real estate on the market, you've got a lot of people not buying, and then you kind of force yourself into a major bind, or potentially some form of a weird market crash, which a lot of people would argue why that would come about. But inflation could cause something that causes something that causes something that ends up causing something weird with real estate prices where they could come down. Now, I'm going to be completely honest with you. I don't know all of the pieces to that puzzle that would have to fall into place. I just know when the government starts messing around, and they have been doing a lot of that lately with shelling out a ton of money, there's always a risk for shiz to hit the fan. The other bummer with higher interest rates is a lot of times interest rates can go up, and because there's kind of a delayed response, or there's no response at all, it can be a lot harder for you to be able to purchase a rental property where the numbers make sense. Because if the market doesn't adjust and a property that was going to sell at $400,000 continues to sell at $400,000, but interest rates go up by 25 or 50%, that could be a major issue, because now it's going to be a lot harder to find a good deal on a rental property, at least in comparison to the kind of deals you can find right now. And I know a lot of you are saying, Chandler, you can't find deals right now because it's so competitive. Well, that's true, but imagine this same market except with higher interest rates. Now, some might say because of higher interest rates, people might back off, they might stop shopping. I mean, there's so many different things that can happen, but overall, I think if you own rental properties, inflation is a good thing. If you don't own rental properties, inflation kind of sucks, because most of us have money in the bank, and if we don't own anything other than money and other goods that aren't really going up in value because the dollar is going down in value, it just sucks, because then everything you're in possession of is just going down in value because the buying power of the dollar is going down in value. For some of you that own smart car purchases, and I'm not one of those, I seem to like to buy cars that just go down in value. But if you're one of those people that has a car that goes up in value, again, inflation could be a good thing because that's going to help those prices continue to go up. But again, real estate is kind of that one inflation-proof investment where if you've got your money in real estate, unless shiz really hits the fan, inflation should be a good thing because it should mean that your property goes up in value, and it should also mean that rents should go up, and both of those things are gonna be a great thing for your bottom line. So if you're one of those people that's saying, Chandler, should I invest in real estate right now? Well, here's the deal. If you're a doomer and a gloomer, there is that potential that in the next 5 years, you're in a place where, you know, the market kind of takes a tank and you can jump in and buy a good deal. But what I would tell you is if you're not currently shopping, if you're not currently looking for a good deal, and if you're currently not finding a good deal, if you haven't purchased that first deal, you might not even know what a good deal is when that opportunity comes. And on top of that, interest rates right now are still extremely low. So if you can find a good deal where you can pick it up with a low interest rate, I would say right now is an incredible time to purchase a rental property. So if you're looking to buy a rental property and you find a good deal that's below market value or a value add deal, that's a great thing for you. If you own rental properties, again, this is a great thing for you. If you're just sitting there with a bunch of cash in the bank, I'm sorry, this kind of really sucks for you. So there's my overview of inflation and the impact that it's going to have on real estate investors, and if you should purchase a rental property or not. If you enjoyed this video, make sure you remember to smash the like button, subscribe to the channel, and hit the little bell so you can catch my future videos where my goal is to help you to build a huge passive income. And just a quick reminder, I am re-releasing my real estate investing course here in the next month or two. I haven't really released the release date, but it is coming. And so if you want to pick up my real estate investing course, you can get $50 off using the link below. And you're going to want to do that because the price of the course is going up by $250 when I re-release it. And when I re-release it, there's going to be a ton of new content. So the course right now is awesome, but we're adding a ton to it. And I'm really excited to see what you guys think. So again, if you like the video, smash the like button, and we'll look forward to seeing you in the future videos. Thanks, guys.